With the help of all that information, I'm going to now share my Bitcoin prophecy.
A currency is a standardization of money in any form in use as a medium of exchange.
In all these years, Bitcoin has given rise to a huge ecosystem of what we now know as cryptocurrencies.
When people hear the word crypto, they think of money, digital coins, quick profits and wild prices that make millionaires overnight. But behind all that noise, there's something most people never see: the invisible systems that actually make it work. Every transaction, every token, every decentralized app runs on layers of code, servers and people. Yes, people who keep the whole thing alive. It looks free and open, but under the surface, it's full of hidden rules, control and power. Crypto promised freedom from banks and governments, but after more than a decade, many are asking, who really runs decentralized finance?
All right, let's take a quick look back in history. This day, January 3rd, 2009, Satoshi Nakamoto mined the very first Bitcoin.
It all started in 2009 with Bitcoin, a quiet post on an online forum by someone named Satoshi Nakamoto. No one knew who they were, but their idea was clear: a new kind of money that didn't need banks or middlemen. Bitcoin was built on something called a blockchain, a public record that anyone could see, but no one could secretly change. Every block stored a list of transactions, all connected together in a chain that couldn't be broken. That made it honest. That made it powerful. The early days felt like a rebellion. People joined from around the world, coders, dreamers, libertarians, all united by one belief: that money should belong to the people, not to governments or big corporations. Bitcoin was slow, but it worked. It proved that digital money could be trusted not because of a person, but because of code. Then came the next big step: Ethereum, launched in 2015 by a young developer named Vitalik Buterin. Ethereum wasn't just digital cash. It was a platform for programmable money. Anyone could build apps that ran on the blockchain called smart contracts. Tiny programs that executed automatically when certain conditions were met. That idea changed everything. Suddenly people could build their own financial systems, lending, borrowing, trading without banks or paperwork. And just like that, the dream of DeFi, or decentralized finance, was born. Back then it felt like the start of something unstoppable. Online forums buzzed with ideas. Developers stayed up all night writing code. Small teams were creating what felt like the future of money. No boardrooms, no CEOs, just people and code. But as we'll see, code alone wasn't enough to keep it pure. By 2020, crypto had gone from a small internet movement to a full-blown global industry. And at the center of it was DeFi, decentralized finance. DeFi promised something big. Anyone, anywhere could borrow, lend or earn money without a bank. All you needed was a wallet and an internet connection. Apps like Uniswap, Aave and Compound started popping up everywhere. They looked simple, but behind the scenes they were running complex code on the Ethereum blockchain. Billions of dollars began flowing through these systems. People were excited. It felt like the financial revolution everyone had been waiting for. No paperwork, no gatekeepers, just code and freedom. But the deeper you looked, the more you realized that DeFi wasn't as decentralized as it seemed. Every DeFi app runs on smart contracts, lines of code written by humans. And when those contracts have bugs, hackers can break them. That's happened again and again. One bad line of code, and millions disappear. Then there's control. Many projects say they're run by the community, but most still have a small group of developers or investors with the real power. They can change the rules, power trades, or even take funds if they want to. And let's not forget the whales, the big investors holding huge amounts of tokens. They move the markets with a single click, while smaller investors just follow the waves. Then came the crashes. The Terra Luna collapse in 2022 wiped out over $40 billion in value. It showed how quickly things can fall apart when code, greed and human error mix together. For a moment, the dream of a fair, open financial system started to look fragile. People began asking tough questions. If a few people still hold the power, is it really decentralized? If the system can crash overnight, is it really safer than banks? The answers weren't simple, but the truth was clear. The deeper crypto went, the more human it became. Behind every piece of code were people making choices, setting limits, and controlling what others could and couldn't do. DeFi was built on trust in code, but in reality it still ran on trust in people. And that's where the story takes a turn, because the more control crypto tried to remove, the more it created new kinds of control hidden in plain sight. Today, crypto and DeFi are bigger than ever. There are millions of users, thousands of tokens, and whole countries now exploring digital currency. But even in this decentralized world, power has quietly started to gather again. Let's start with the exchanges, the places where most people actually buy and sell crypto. Names like Binance, Coinbase, and Kraken. They're convenient, fast, and easy to use. But here's the thing. When you keep your crypto on these platforms, you don't fully own it. You're trusting a company, the very thing crypto was built to avoid. And these exchanges are huge. They control billions in assets. When they freeze withdrawals or get hacked, the whole system shakes. It's a reminder that even in the world of decentralization, most people still rely on central points of trust. Then there are stablecoins, digital tokens tied to the US dollar. They're the backbone of DeFi. People use them to trade, lend, and earn interest without touching a bank. But stablecoins are only as strong as the companies behind them. Tether, USDT, USDC, and others claim to be backed by real cash or assets, yet they're not always clear about what those reserves actually are. If one of them fails, the whole DeFi system could feel the shock. And let's talk about mining and staking, the process that keeps blockchains alive. In theory, it's open to everyone, but in practice, a few big players control most of it. Large mining farms, data centers, and staking pools hold massive influence over how networks run. So even though crypto was built to remove power from the few, it slowly found its way back to them, just in a different form. Governments are starting to notice too. Regulators around the world are trying to catch up, writing new laws for crypto exchanges, stablecoins, and DeFi projects. Some say it's needed to protect people from scams and fraud. Others say it kills the whole point of crypto: freedom from control. And while all this is happening, new projects keep launching faster, riskier, and often with the same hidden flaws. The illusion of total freedom is still there. But the truth? DeFi runs on layers of trust in developers, trust in exchanges, trust in stablecoins, and trust in the same human systems it was meant to escape. That's the paradox of crypto. The more it tries to be free from control, the more it builds its own quiet hierarchy underneath. The world of crypto isn't slowing down. Even with all the crashes, hacks, and chaos, new projects keep showing up every day. And now a new wave is beginning to rise, a mix of AI, automation, and blockchain. Developers are building smart contracts that can learn and adapt on their own. They call it autonomous finance. Imagine a system that changes its own rules depending on the market, no human needed. It sounds futuristic, but parts of it are already happening. Then there's tokenized assets, real-world things like property, art, or stocks being turned into digital tokens you can trade online. It means someone could buy a piece of a building or a song just like they'd buy crypto. If that idea catches on, the line between digital and real money could disappear. And yet the same question remains: who controls it all? If a few people design the code, set the rules, and profit the most, is that really freedom? Still, not everything is dark. Some communities are trying to bring crypto back to its roots. Projects that are truly open source, where decisions are made by thousands of users instead of a few founders. They vote, they argue, they build together. It's slow, messy, and human. But maybe that's what real decentralization looks like. As governments step in, crypto might grow up. It could become safer, more stable, and more connected to the world we already live in. Or it could split in two, one version for the system, another that stays wild and free on the edges of the internet. No one really knows which way it'll go. But one thing is clear: the idea that started with Bitcoin trusting the code, not the bank, isn't going away. It's just changing form. Crypto began as a protest, a way to take power back from the few and give it to the many. But somewhere along the way, it built new systems of control. Hidden networks, private keys, unseen players, all shaping the thing that was meant to be free. Maybe that's just human nature. Every time we build something to escape control, we end up rebuilding control in a different way. The real story of crypto and DeFi isn't just about money. It's about people, power, and the endless fight between freedom and order. And maybe that's the truth behind every system, no matter how decentralized it looks. If this story made you think, hit that subscribe button and stay tuned, because the next chapter of crypto might not be about coins at all, but about who controls the future of money itself.